Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's bring in our next guest for our cash tag segment. That's going to be Megan Brantley, the Vice President of Research at LikeFolio.com. Welcome to the show, Megan.
Thanks for having me, guys. It's good to chat with you.
Yeah, you too. So we're talking retail. We just covered Home Depot, which is a stalwart of the retailers. Today we got a couple downgrades in this particular space. Ralph Lauren got downgraded, and also TJX. But what kind of consumer sentiment data are you seeing? Are people turning away from shopping for goods? You've got a high-end retailer like RL. You've got a lower to mid-tier retailer like TJX. Are you starting to see a slowdown, or is the consumer still on fire at this point?
So whenever we look at this, we're looking every single day to say, okay, when will these pressures that we keep hearing about start weighing on the consumer? When is there going to be this switch in consumer behavior when it comes to spending, and what areas is this impacting? And so just on a broad scale, when we look at these larger macro trends, we see inflation fears at all-time highs. We see gas price concerns rising. We see a lot of economic pressures building, or at least weighing on the minds of consumers. But then when we look at actual spending, we see, spending still occurring. We see mentions of consumer shopping and buying new clothes rising on a year-over-year basis, and continuing to rise even on a quarter-over-quarter basis. I think it's interesting whenever you start to look at even, utilizing credit cards. We have maxed out credit card mentions up about 9% year-over-year. In contrast, we have people talking about paying off their credit cards down about 45% year-over-year. So for us, I think this shows us that the consumer is still spending. And I think that for us, long term, we're wondering, okay, is this something that, the consumer is going to continue spending, or is this an instance of pent-up demand where, consumers are excited to get back out there, they're traveling, they're going to concerts again, they're going out to restaurants again, they're, going to weddings and social events, and they need new clothes and they need new things. And so they're spending on these things, but, is it sustainable? I don't know. But at least so far in our data, we're not seeing consumers reaching a breaking point yet. So I think that that's really interesting because, based on what you hear and what we're seeing with inflation and gas prices and things like that, you would expect this stress to begin weighing. We're just not seeing that quite yet, in our data at least. And I think another thing that's interesting is you made a good point about, Ralph Lauren and TJ Maxx. These are two very different companies in terms of the, higher end or lower end. And we really see two different behaviors from consumers in these different groups whenever we look at, retailers that may or may not be perceived as higher end versus retailers that may or may not be perceived as lower end. And, this almost feels counterintuitive whenever you look on this chart, because where you want to be is the top right. You want to be that Revolve, which sells, higher fashion brands, the Ralph Lauren, the Abercrombie and Fitch, these are higher ticket spends whenever you're shopping here versus, say, a TJ Maxx, a Burlington, a Ross. And you would think as consumers start to tighten their wallets that you'd start to see these discount retailers perform better. But so far, at least in our data, we see consumers who are splurging more on the higher quality products versus the lower quality products. So, I don't know if it's a case of, perhaps the dried up stimulus spend is impacting the shoppers that would traditionally shop at a TJ Maxx or a Ross or a Burlington versus shoppers that would traditionally shop with a Ralph Lauren. But we are starting to see a divergence, at least in our data, for the retail preferences of the consumer.
Megan, when we look at a company like TJX, and they've also got Home Goods, they've also got Marshalls, that's kind of the treasure hunt look, right? Where Ralph Lauren, you could order online and it's their newest clothes. You have to go search at TJX. Do you think that's what's hurting it? Or is it the discount version that's getting hurt? What do you think is hurting them? And then I don't know if this tags me as old or out of touch or a nerd, but I don't know what Revolve is, Megan. Could you tell me what is Revolve? I know all these other ones, Megan, but what is Revolve? I don't know even what that is, and it's the coolest, best, most high quality, and I don't know what it is, Megan.
So I'm going to go out on a limb and say if you were to ask Jenny Horn that she would know what Revolve Group is. This is a traditional e-commerce space, e-commerce space. I can say anecdotally, this weekend I had a birthday celebration for friends, and we went out and we were going out to eat at restaurants and whatnot, and girls were talking about they bought the top that they were wearing at Revolve, that this was an online purchase that they had made, but not just online, but that a mobile purchase. So I do think that this is an example that kind of highlights maybe perhaps why TJ Maxx is underperforming, in the fact that, you do have to go into the store. You do have to search through a lot of things. When we look at mentions, like, I don't know if you noticed on that where TJ Maxx was located on happiness, but, it's a little bit lower from a happiness perspective versus these peers. And part of that is because sometimes consumers report that the stores feel cluttered. Sometimes consumers report that they couldn't find necessarily what they needed. I think that this is more of that seek and find discovery element versus being able to be on your phone and search through inventory and pick out exactly what you need for an event or for something that you have coming up. So that could be an area where these names like Ralph Lauren, these names like Revolve that have this online presence, that is a nice another platform or another way that consumers can connect and shop that TJ Maxx just doesn't have.
And that brings up a good point here, Megan, because a lot of the retailers like Ralph Lauren or wherever TJ Maxx gets their products from, these are like extras, right? Inventories were low, supply chain issues across the board. They didn't have product to probably give for TJ Maxx and some of these others to resale. But I kind of wanted to focus in on the TJX full company chart that you guys sent over, where you see the sentiment just fallen to the wayside. The stock's still doing okay compared to what kind of data you're seeing for TJX.
Yeah, so whenever you guys said, you want to talk about TJ Maxx and Ralph Lauren, especially, in light of these downgrades, for TJ Maxx, we can kind of see it. You can see this green line. These are mentions of consumers who are actually talking about shopping at TJ Maxx, talking about shopping at HomeGoods. And you can see that growth is declining on a quarter-over-quarter and year-over-year basis. So, we're definitely starting to record some weakness. And especially whenever you look at it on a chart and you compare it to other names that, maybe not all names in this retail space are created the same. So for us, if we were to calculate an earnings score on TJ Maxx, we are technically neutral in terms of just the slope of that line is continuing down at about the same rate that it has been. So we are technically neutral, but I can certainly see the reason for a downgrade, especially amid some of the pressures that you talk about, like maybe there is less inventory to choose from. And, we do start to see that show up in mentions. We do start to see that weigh on happiness when consumers can't find what they're looking for, or they don't feel like there's as large of a selection for a company like TJ Maxx. But in contrast, if we were to look at Ralph Lauren, you can see that purchase intent line, that demand growth is actually building on a year-over-year basis. So if we were to put an earnings score on Ralph Lauren, for example, ours right now would be a 66, which is pretty positive. So, we saw that they had a really nice holiday season, and mentions are still elevated, especially from where they were a year ago. So, definitely a tale of two stores with these two names for sure.
Yeah, I like the sentiment data on that. And it's just surprising to me. You'd think with all these inflationary pressures that TJX, more people would be going there. But to your point, maybe they're just not finding what they want. Maybe inventories are low because they rely on other retailers to get that second chance to sell them if they have over inventory, or maybe the seasons are changing. All right, great stuff as always, Megan. Appreciate it. Have a great day.
Thanks for having me, guys.
All right, that's Megan Brantley, the Vice President of Research at LikeFolio.